How's it going, everyone? It's Sam. Today, I want to talk to you about a new SPAC that was just announced. It's a company that's already working with some large players and will hopefully help these companies compete against Amazon. So this company is an AI software and robotics company. They already have a pretty big pipeline. They have Chamath leading the PIPE investment, which is the private investment in public equity. And I bought some shares and I also bought some warrants. Towards the end, I want to explain kind of what warrants are because I'm getting a lot of questions on it, what warrants are and how you can use them and stuff like that. So I'll explain that towards the end. But before I do, I just want to say it's nice to see a green day. I was hoping for either a very red day or a green day today. You can see here, a lot of our positions are actually up a good amount. Now, if you guys want to know right when I buy and sell stocks, we picked up a couple stocks yesterday that were just beaten down by the dip, and they're actually up pretty nicely today. So if you guys want to get that a little bit quicker next time, you can check out the link down below to Patreon. If you want to see, right when I bought this SPAC stock today, instead of, maybe after it runs up or something like that, you can check out the link down below to Patreon. There's also a link down there to BlockFi. So in my video last night, I talked about how Square actually bought $170 million worth of Bitcoin, and that was just announced yesterday, but a lot of people didn't see it because of everything that was happening in the market. But if you guys want some interest on your Bitcoin, or if you want to put some stablecoin in there, you can check out the link down below to BlockFi. There's also a link down there to WeBull if you want 2 free stocks if you deposit $100. So I appreciate that, and thank you for hitting the like button, and let's get into it here. So the company today is Berkshire Grey. They are merging with RAAC in a SPAC merger. Now, right now, the company is sitting around $12.50, maybe $13 by the time you see this. It's supposed to give them $413 million in cash proceeds, and the PIPE investment is anchored by Chamath. So he actually posted about it on his Twitter. He says it's an amazing company building robotics, AI, and software that automate warehouses for customers like Walmart, Target, FedEx, and TJ Maxx. So they already have these customers there. They're expecting a very high compounded annual growth rate, and I'll explain that here in a second. It's important to realize too, the Berkshire Grey shareholders are rolling 100% of their equity in the combined company. So they're not trying to cash out. A lot of these SPACs do that where they say, okay, we'll keep part of it in there, but we really want like $300 million or something for the initial shareholders. But they're not doing that. Now, what are they doing? I'll play it here for you so you can take a look. So basically, they're helping automate different companies and helping them compete against the likes of Amazon, let's say. So basically what they're saying, they're helping retail, e-commerce, grocery, package handling companies to transform, compete, grow, and win. There's a $280 billion total addressable market. Now, what's happening right now is companies like Amazon are kind of taking over, and they are enabling people and customers to get their products within a day, 2 days, which that's just starting to become kind of normal for people. People are expecting that. So they have a couple tailwinds right now. So one tailwind is that they are benefiting from the digitization of shopping, especially during the pandemic. A lot of people started shopping online more, and it's caused a lot of companies to have to get with the times and be able to automate this and make it a lot quicker. Also, Amazon itself is just growing into such a large company. They talk about Amazon a lot in this, and they just keep on pushing companies to have to innovate. Now, this company will have no debt on the balance sheet after this transaction is done. $114 million worth of orders to date, $70 million in the current backlog. You can see the CEO and the founder has 30 years of robotics and technology experience. He's a former chief technology officer at iRobot. The COO has also had a very long career, 30 years, focused on delivering disruptive and impactful technologies. So they have a lot of experience on their team. So some of their value statements I think are really important. First of all, it allows for increased production, which in 2 to 3 years gives you a return on investment. 70% reduction in labor spend through robotic picking. So one of their solutions equals 8 manual pickers and 100 or hundreds of case handlers. So they are able to produce a lot of value very quickly. And their software and AI is just a recurring revenue stream for them, and they can update it and hopefully increase efficiency down the line. Now you can see that they are growing too. They have 50 new hires since the beginning of 2020. They have experience at Microsoft, NASA, iRobot, Tesla, Amazon Robotics, Penn. They have a lot of experience on this team, and they already work with Walmart, Target, FedEx, and TJ Maxx. So they're already in a variety of different sectors and different companies. And they say that they have about $1.3 billion worth in their 5-year pipeline. Now, this is their projections for their revenue. So they're expecting $35 million from 2020. They're expecting this to grow to $59 million next year, 119, 248, and then all the way up to almost $1 billion by 2025. Now, the company right now is valued right around $2.7 billion for the pro forma equity value, and then the enterprise value about $2.2 billion. So the existing shareholders are still going to own 82%, which I like. That means that they really just want a little bit of capital injection to help them grow. And the PIPE investors are actually less than the shareholders too. So that's something to keep note of. Now, I want to take a look at what some of their former employees said. This is just on Indeed.com. They only have 2 reviews, but one says, amazing team, was extremely friendly and kind and great at conversation. Overall, great people to work with. The work that they do is intriguing and amazing to watch. The other person said, not my type of culture, but it's still interesting what they say. Very young culture, not best suited for the older worker. Open work table environment, no cubes, no privacy. I found my environment very hard to concentrate and perform complex tasks. So you can see that they are, innovative. They're trying to innovate. They're trying to be a company that is more, with the times, as they say. So personally, I kind of like that. I mean, I don't mind a 2-star review if it's just that they are being innovative, and some people, don't like that. But I find that interesting just in general. Now, the company itself, the SPAC right now, we'll just pull it up here, is trading at $12.66. Now, what I did was I actually bought warrants and I bought shares. So again, if you guys want to know right when I do it, you can check out the link down below to my Patreon. But I know a lot of people have been asking me the difference between warrants and stock options and just warrants in general and shares. A stock warrant gives the shareholder the right to purchase a company's stock at a specific price at a specific date. So a warrant is issued directly by the company, and an investor exercises a stock warrant. They receive shares from the company, as opposed to a stock option, which is a contract between 2 people. Now, both of them have a specific date in mind. Both of them have a certain price. So with stock warrants, a lot of the time with these SPACs, and this is the case with RAAC, they have a strike price of $11.50 per share, and they have some cost to them themselves. Usually they might start around $1 or $2, $3, and then as the share price goes up, you get a higher and higher amount of fluctuation in the price of the warrants. So if let's say you pick it up at $1, right? You buy the warrants for $1, the share price goes up to $15.50. It would make sense that the warrants would go up pretty dramatically because you have the option to buy the shares at $11.50. So really, the break-even point would be the warrants are $4. You sell them to someone else. They get the right to buy a share at $11.50. The shares themselves cost $15.50. You're buying the warrants for $4. So that would be the break-even point there. So they fluctuate a lot more in value. I kind of see warrants as an in-between between options and shares themselves, at least in terms of risk. Now, that's not probably the best way to put it, but that's kind of the way I view it. It's less risky, in my opinion, than an option, but it's more risky than actually buying the shares. You don't have to actually go through and exercise the warrant or go through and exercise the option. A lot of the time you can sell these to someone else without actually having to exercise them. So that's what I'm going to do. I don't believe I will exercise the warrants at all. I will probably just sell them at a later date, and that might be more of a swing trade for me, while these shares are more of a long-term play for me, because the warrants fluctuate a lot more in value. So I want to make more of a swing when that goes up. I think it will go up because I think this is a good company, but I'll most likely hold on to the shares for a longer duration. It is riskier, especially in this environment, to buy warrants, but it's something that I want to do for a while, and I didn't realize that there was a way on Fidelity to do that. Again, just an interesting company, right? That's working with some big competitors to Amazon. Also, already has a large investment from Chamath. Now, of course, do your own research. If you guys want to see a video from yesterday on something that I find really interesting, I'll put it up here on the end screen. Thank you guys, and I'll see you in this video. Bye.